Stocks take a breather after strong gains in the past week. Realty, metals and financials drag even as industrials and healthcare eke out gains. The government is set to invite financial bids for IDBI Bank soon as talks on the share purchase agreement with potential bidders near a close. The move comes on the back of Finance Minister Nirmala Sitharaman indicating a completion of the deal in FY26. Torrent Pharma will buy out KKR's 46% stake and make an offer to employees and minority stakeholders of JB Chem in an over Rs 19,000 crore deal followed by a merger of the company. Analysts give the fairly valued deal a thumbs up. The deadline for IndusInd Bank to send its recommendations for the CEO position to RBI ends today. Sources tell CNBC-TV18 Rajiv Anand of Axis Bank, Rahul Shukla of HDFC Bank and Anup Saha of Bajaj Finance may be named in the list. Hope of an early US trade deal rises after Donald Trump says a very big deal with India may be possible soon. Indian trade negotiators visiting the US extend their stay, giving this hope more legs. Well, the Nifty is at 25,500. It has given up most of its gains seen this morning, and the markets are taking a bit of a breather after 4 consecutive sessions of gains. The markets did attempt to post a modest recovery, but they're back at the day's lowest point. At the broader end of the market, though, that is doing quite well for itself. Take a look at the advance decline ratio. It is largely in favor of the advances, but since morning the gap has been narrowing, and that is reflecting in the mid-cap as well as the small-cap index. The mid-cap as well as the small-cap index both are doing quite well, although we're seeing some bit of cool-off from the day's highest point. As far as specific sectors are concerned, it's the PSU banks that are leading the gains. Look at the Bank of Maharashtra, up almost 4%. PNB, Union Bank, all of these counters are trading with gains upwards of almost 3%. But Nifty Realty was the top sectoral loser last week. It continues to be the, it continues to decline in trade today, down almost 0.5%. Let's also look at some specific stocks then. Take a look at Hiranba Industries. Big moves out here. Last I checked, the stock was up almost 13%. Alembic Pharma also seeing very good gains. But, let's move on and let's talk about Mega Pharma deal between Torrent Pharma and JB Chemicals and Pharma. What are the contours of the deal? How will the deal impact the business of both? And what are brokerages making of this deal? Ikta is standing by the wall to tell us more. Ikta?
Well, yes, Torrent Pharma has announced a 2-phase acquisition of JB Chemicals from KKR, marking one of the largest deals in India's branded pharma space since possibly the Ranbaxy-Sun merger. Torrent will first acquire 46.39% stake for around 11,917 crores and may pick up an additional 2.8% from JB Chemical employees at around 1,600 rupees per share. An open offer for 26% follows at around 1,639 rupees per share, with the total size of the acquisition for Torrent possibly going up to as much as 19,480 odd crores. Now, in the second phase, the companies will merge, with JB shareholders receiving 51 Torrent shares for every 100 held. Now, the deal values JB Chemicals at around 25,689 crores and 11% discount to its closing price ahead of the deal. With the JB Chemicals acquisition, Torrent Pharma is now poised to rise from the 6th to the 4th largest pharma company in India. The deal, in fact, is expected to boost its domestic revenues by 35%, surpassing 8,600 crores based on FY25 numbers. Torrent will strengthen its dominance in cardiac and gastro segments, gaining top brands like cardiac drug Silicar with sales of 785 crores and gastro drug Metrogyl at around 342 crores in terms of a size of a drug. It also secures entry into ophthalmology and expands its footprint in the global CDMO space. Torrent Pharma may in fact fund the JB Chemicals acquisition through a mix of internal accruals, debt and equity via QIP. It could take on as much as 10,000 to 12,500 crores of debt, pushing the combined net debt to around 14,500 crores and a net debt to EBITDA to around 3 times on an FY25 basis, according to analysts. However, analysts including DAM Capital are not overly concerned. They point to Torrent's steady free cash flows and believe a 2 times EV to EBITDA leverage is reasonable and the debt could be pared down in 3 to 4 years. Now, while JB Chemicals currently operates at a lower EBITDA margin than Torrent Pharma, analysts are not overly concerned about that either. Torrent has had a strong track record of cost rationalization as seen in its past acquisitions of Elder, Unichem and Curatio, which saw margin expansions within 1 to 2 years. While we could see near-term dilution, analysts believe the combined entity could target EBITDA margins of 34 to 35% over the next 3 to 4 years. Lastly, what are the brokerages saying? IIFL recommends JB shareholders should avoid tendering in the open offer and wait to swap their shares in the merger. Nomura expects the adjusted EPS accretion in the mid-single to low double digits. They maintain a neutral rating with a target price of 3580. HSBC expects the deal to be 3% accretive to FY27 estimated EPS estimates. They retain a buy with a target price of 3,775.
Well, thank you so much, Ekta, for a comprehensive roundup of that development. But moving on, the government will soon be inviting financial bids for IDBI Bank. Sapna Das joins in with the latest on this.
Absolutely. So this is going to be a completion of a long journey. If you can recall, way back in October 2022 was the first instance when the preliminary bids for IDBI Bank disinvestment had been called. And we are now in 2025. So what we're clearly given to understand is that probably the government is close to agreeing or rather finalizing the share purchase agreement with potential bidders for IDBI Bank stake sale. And once that important milestone has been crossed, the next stage, of course, would be calling for the financial bids, and we are given to understand that there may not be too much of a gap between both the exercises. Of course, approval from the ministerial panel, which is headed by the Finance Minister herself, that will be sought. The Finance Minister herself has already indicated that the government expects to close the IDBI deal in FY26. So my sense is that before H1 ends, I think the government will be in a position to call for financial bids, if not sooner than that.
Thanks for that, Sapna. That explains why the stock is up almost 2.6%. But moving on from one bank to another, today is the last day for IndusInd Bank to submit potential CEO names as per RBI's June 30th deadline. Ritu joins us with more details. Ritu, what do you have for us?
Well, yes, June 30th is the deadline that was given by the Reserve Bank of India to the board of IndusInd Bank to submit the list of potential CEO candidates that we've been reporting on. And, there are 3 that the board actively considered and we believe has submitted to the RBI. This includes Rajiv Anand from Axis Bank, Anup Saha from Bajaj Finance, and Rahul Shukla of HDFC Bank, all 3 candidates with about 3 decades or more of experience in this field. Now, Rajiv Anand, currently the Deputy MD of Axis Bank, who is overseeing the wholesale and digital banking functions, is one of the strongest contenders, as what we've been given to understand. Importantly, he's already announced his retirement from the bank and is set to step down in early August. That would make him available to take charge at IndusInd if selected. And our sources do point out that he's very much the #1 man for the job that, the regulator's also looking at. Anup Saha, who was recently elevated to the position of Managing Director at Bajaj Finance, is also seen as a strong contender. And the third candidate is Rahul Shukla of HDFC Bank, who earlier oversaw the corporate book and then later commercial and rural banking, but is currently on a sabbatical from HDFC Bank. Now, we understand the board has been engaged with RBI on these names informally for the past few weeks. And given the extraordinary situation at the bank with the leadership vacuum at the moment, the regulator is also likely to fast-track this approval process.
Thanks for that, Ritu. But do stay on. Now, on to the latest in the JP Associates resolution then. Sources are saying 6 suitors submit bids, but only 5 qualify. Ritu, can you give us the details?
Well, yes, as we reported last week, there are 6 suitors that had come forward. However, one of them has been disqualified, and that leaves 5 suitors in the fray for JP Associates. And these are heavyweights like the Adani Group, Vedanta Group, Dalmia Bharat, and Jindal Power from the Naveen Jindal Group. You also have listed infrastructure player PNC Infratech that is also in the fray. Now, our sources indicate while Suraksha Group controlled JP Infratech had submitted a bid, it has been disqualified because it did not submit the deposit amount. Now, while the financial terms of these offers have not been disclosed yet, some of the bankers we've been speaking to say that that 12,000 crore rupee offer that was earlier made by the National Asset Reconstruction Company to acquire the stress loans of JP Associates from banks could be used as a benchmark by the bidders, and some expect that the offers that come in will be lower than this 12,000 crores given all the litigation that is going around the company's prized land assets in Noida. Remember, there's claims of more than 57,000 crores, so an offer like that would imply a steep haircut for lenders. So we'll have to see how the bidding unfolds, especially with these kind of high-profile corporate names in the mix, but hopefully a step closer to resolution for what has been now an 8-year-long process.
Well, hopefully a step closer indeed. And Ritu, thank you so much for joining us with all of those details. But as we slip into a very short break, remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back. You're watching Business Lunch on CNBC TV18. As we wrap on the first half of the year, Hormaz joins us to break down how the benchmarks and the broader market fared in 2025 thus far. Hormaz, take it away.
More action than an action film, more drama than a drama film. I guess the markets have seen it all in the first 6 months of the year so far. And it is after making new lows for the year, building onto that recovery, is when the Nifty now stands 8.5% higher at the first half of 2025. And this is after an 18% recovery that the index has seen from the tariff lows that it had made on the 7th of April. The Nifty Bank, which is already at new highs, is up 13% so far this year. And this tinge of green that you see in the mid-cap and the small-cap index has come on the back of a near 30% recovery that both these indices have seen from the lows that they made earlier in the year. So now, which are the common top performers on the Nifty so far in this year? Well, BEL, Bajaj Finance, the first 6 months though belong to the life insurance companies. Both SBI Life and HDFC Life are up over 30% each. If you take a look at the list of the underperformers, it is the IT stocks that are forming a common theme here, be it Infosys, TCS, Wipro, all of them are part of the list. So is Trent and so is IndusInd Bank, despite a 35 to 40% recovery from the 52-week lows. You take a look at the mid-cap index, Solar Industries, which has been the talk of the town in recent times, is up 80% in the first 6 months, as is Bharat Dynamics. BSE is at new highs, but L&T Finance is up 50% as well this year. What is down 50% this year, though, is Ola Electric, and that stock is among the top underperformers on the mid-cap index, with names like Oracle Financial, Kalyan Jewellers, Voltas as well. And a common theme across the benchmarks and the broader markets is defense, and Garden Reach Shipbuilders is the top performer on the small cap index, returns of nearly 90%. Narayana Health was making new highs as of last week, is up 80% as well. Godfrey Phillips, Reddington and Naveen Fluorine, after a slew of brokerage positive commentary, is up 50% as well. And among the underperformers, well, Brainbees, Natco Pharma, Anant Raj, all of these names seeing losses of anywhere between 35 to 40%. Well, it's been an action-packed first half of 2025, and the bulls would definitely be hoping that the second half may be less action-packed, but it definitely delivers the returns as we have seen in the last few months.
Well, fingers crossed for that, Hormaz. But moving on then, earlier we spoke with Mahesh Patil, Chief Investment Officer at Aditya Birla Sun Life AMC, on the market outlook and his top sectoral bets. Let's listen in.
Overall, I think the liquidity flow into the markets is also improving. We've seen FIs slowly starting to come back. Domestic flows have been steady. And I think valuations were reasonable. I mean, markets, after the correction, what we saw around 6-9 months back, a lot of stocks had come down to decent level. We've seen now interest coming back, not only into the frontline names. I mean, the large caps were always looking good on a valuation perspective. But even the broader market, right, the mid-cap and small-cap have seen a good recovery. Although I would say that it is more stock-specific in the mid and small-cap. Not everything is moved up, but clearly, I think the confidence is coming back. Would be preference would be more towards domestic plays because global uncertainty, I think, on the tariff front, while we've seen that, I think that might still prevail for some time. So domestic plays, especially, as I said, the focused on the rural consumption. So we've seen that even some of these agrochemical companies are likely to report very good numbers in this quarter because volume growth has been strong. But as we move forward, right, we should see some of the discretionary consumption, especially as we move into the festive season, should do well. Rate cuts have happened, and we've seen the transmission of that happening pretty fast, and that should help some of the interest rate plays, especially, say, if you're looking at banking and financial, then the financial services, and the NBFCs in particular, I think should see a better growth not only, but also improvement in the margins over there. I mean, the IT sector was the first one to underperform, right, earlier because of global concerns. And I think on that front, I think US, where you were expecting a recession, the probability was much higher around, say, 3-4 months back. Now that has receded. And looks like at least the commentary also from the IT companies is that the worst seems to be behind. That doesn't mean that you will see a sharp recovery over there in terms of volume growth. It will be still slow and tepid. But I think this is a sector where I think overall stability, I think, would be there. I think the downgrade cycle seems to be behind over there. Also, the cross-currency impact also could be slightly positive, at least in this quarter.
Well, moving on then, on the back of the easing tensions in West Asia, we spoke to A.S. Sane, chairman of Indian Oil Corporation, and asked him about the update on their Nagapattinam project. Listen in to what he had to say.
The Nagapattinam refinery is, we have gone back on the drawing board because the viability of that refinery was not becoming very good. So now we have gone back on the drawing board and we are putting into more and more petrochemicals into it. So it might change the financial outlay, but it will be more of a petrochemical plant now going forward instead of a pure refinery play. So we are reconsidering our configuration, and again we will go back to our board for taking approval for that and then move forward.
Well, that was the management of IOC, the stock trading with a cut of 0.3%. But as we slip into a very short break, here is some good news for our viewers. India's business news leader is now only a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're watching Business Lunch on CNBC TV18. Back in Washington, the president addressed another looming deadline. Trump said he's unlikely to extend the July 9 trade deadline he set for countries to reach new deals with the U.S. to avoid higher tariffs.
Is that July 9th date a set for tariffs to snap back, or could there be a...
We can do whatever we want. We could extend it. We could make it shorter. I'd like to make it shorter. I'd like to just send letters out to everybody. Congratulations, you're paying 25%.
Meanwhile, Trump has said he is cutting off trade talks with Canada immediately as the country looks to start enforcing a tax policy targeting big tech companies. The latest move comes as neighboring nations had been working to agree a trade deal by mid-July. Both countries have imposed tariffs on each other's goods after Trump sparked a trade war earlier this year and threatened to annex Canada using economic force. Canada's Prime Minister Mark Carney said complex negotiations will continue in the best interest of the Canadians. Let's listen in.
Any reaction to the news you put out?
No, look, we'll continue to conduct these complex negotiations in the best interest of Canadians. It's a negotiation.
Well, Senate Republicans pushed U.S. President Donald Trump's tax cut and spending bill forward during a marathon weekend session on Saturday. It comes even as Congressional Budget Office estimates that the bill will add over $3 trillion to the U.S. deficit. NBC's Ryan Nobles joins us with the details.
Democrats forcing the Senate clerk to spend nearly 16 hours reading every word of what President Donald Trump has dubbed his big, beautiful bill.
139L, the following new...
That bill could add more than $3 trillion to the deficit over the next 10 years. The GOP wants to overhaul social programs like SNAP, also known as food stamps, and Medicaid. The cuts to Medicaid are what led North Carolina Republican Senator Tom Tillis to vote against moving the bill forward, prompting threats from President Trump to meet with primary challengers. Then today, in a shocking announcement, Tillis announced he would not seek re-election and slammed gridlock in Washington. The Senate's bill would tweak the way states receive Medicaid funds, reducing the amount they take in via a special tax, instead creating a $25 billion fund to help support rural hospitals. The new funding formula leaving people like Sierra Matthews from Missouri worried her hospital could shut down.
If we take that away from a small rural area already, is that another 2-hour drive? Is that a 3-hour drive just to see a doctor?
Democrats argue the bill's growth is out of control.
This bill stinks. It's a moral abomination. Everybody that learns about it hates it.
It's filled with special carve-outs, like $85 million to move the retired Space Shuttle Discovery from a museum in Virginia to Texas, the creation of a $1,000 Trump saving account for all newborns, and requiring a $100 fee for anyone applying for asylum.
On to updates from the Russia-Ukraine war. A Ukrainian F-16 fighter pilot was killed while repelling a Russian attack. This comes as Moscow intensifies overnight air barrages in the 4th year of the war. Take a look at this report.
A Ukrainian F-16 fighter pilot was killed while repelling a Russian attack overnight that involved hundreds of drones, cruise and ballistic missiles, Ukrainian authorities said on Sunday. In Kyiv, families huddled in metro stations for shelter after air raid sirens rang out. Machine gun fire and explosions were heard across the capital and in the western city of Lviv, where such attacks are less common. Russia has intensified nighttime air barrages in recent weeks, causing widespread damage and killing many civilians. The Ukrainian Air Force said the pilot did everything he could and flew the jet away from a settlement but did not have time to eject. Kyiv has not revealed how many F-16s it operates, but they have become a central and heavily used part of Ukraine's air defences. It has now lost 3 since it began operating the US-made jets last year. President Volodymyr Zelensky called for more support from Western allies to bolster Ukraine's air defences after the attack. Under President Donald Trump, Washington has not committed to new military aid for Ukraine. Trump said he was considering a Ukrainian request for more Patriot missile batteries after he met Zelensky at a NATO summit last Wednesday.
Let's move on then. A reactor explosion ripped through a pharmaceutical plant in Telangana. At least 2 workers are feared to be killed and 15 others injured, according to PTI. The police, fire services and other personnel launched rescue and relief operations. Ambulances were also seen at the spot to shift the injured to hospitals. The injured were admitted to government and private hospitals. The conditions of some of the injured is stated to be critical. Well, that's all we have on this edition of Business Lunch. Don't go anywhere because Midcap Radar comes up next.